Welcome to Beyond the Benchmark. We're here to explore how less than 3% of people invest and how to get ahead with alternative investments. I'm Ahmad Ashrafi, and in today's episode, we're answering the following question. What are alternative investments and why do they matter? Alternative investing was created to be a non-correlated vehicle for portfolios. What does that mean? There's a concept called market beta. Market beta is how closely are different vehicles, different asset types correlated to one another. Unprecedentedly, since 1996, there has been a further correlation of all asset classes, especially traditional ones. That means that stocks and bonds move together, crypto moves together, Nasdaq, Dow Jones, S&P 500 move together. Sometimes even they start clustering certain assets or certain stocks like the Magnificent Seven and they move together, even though they're completely different. This market sentiment of correlation is a very dangerous and very difficult way to diversify. Therefore, even though alternative investing has existed for a long time, now is gaining a lot more protagonism in the investment market, and it's because of a very important reason. First, it's non-correlated, which means that if the market goes down, this doesn't necessarily go down with it. It's usually non-correlated. And secondly, and I would say more extraordinary, is that $1 million invested into the S&P 500 35 years ago would be $12 million today. That would be considered the benchmark. Nevertheless, in the same time period, the same $1 million would be $140 million in private equity. Therefore, there's a massive shift and a change in paradigm in how alternatives are seen and considered when building portfolios. What are alternative investments, though? Usually, these are private investments, private market investments. If traditionals are public offerings, these are private offerings. And they could range between hedge funds, private equity real estate, venture capital, private credit, infrastructure, gold, and even some crypto could be considered alternative. These are all more illiquid investments, usually. They are built by investment professionals to build on a thesis, and they are highly specialized teams to do this. After being 12 years in this industry, I have created this podcast to demystify what alternative investing is and is not, and how to get access to it. By providing some historical context and evolution, I will be able to explain how alternative investments are here to stay and how that 3% should grow to more people participating. The key difference between traditionals and alternatives is access. It's very hard to enter the private equity market. It's very difficult to enter and get allocations into the private space. And we will use this podcast to bring down the barriers to entry so that you can make better decisions and find diversifying your portfolio into alternatives easier. If you found value in our discussion on this topic, please share this episode with a colleague or friend who might benefit. Don't forget to subscribe to more insights into the world of alternative investments. Until next time, I'm Ahmad Ashrafi, reminding you that in the realm of investing, the alternatives often lead to extraordinary opportunities. Thank you for listening.